preparing for a financial crime analyst interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What do you understand by financial crime, and what is the role of a financial crime analyst? Financial crime is any illegal activity that uses the financial system to move, hide, or generate value. In practice, I focus on money laundering, terrorist financing, sanctions breaches, fraud, bribery, tax evasion, and market abuse red flags. As an analyst, my job is to spot unusual behavior, assess risk using customer and transaction context, escalate credible suspicion, and document clearly so the institution meets regulatory obligations while protecting itself and customers. While answering, focus on the main categories of financial crime: the analyst's prevention and detection role, regulatory obligations, investigation quality, escalation, and protecting the firm from legal and reputational risk. Question 2. Can you explain the 3 stages of money laundering? Money laundering usually moves through placement, layering, and integration. Placement introduces illicit funds, such as cash deposits. Layering creates distance through transfers, shell companies, crypto, trade, or rapid movement across accounts. Integration makes funds appear legitimate, for example via property or business investments. I use this framework to understand typologies, interpret transaction monitoring alerts, and decide whether activity has a plausible economic purpose or warrants escalation to a SAR or STR. Make sure to cover placement, layering, and integration with practical examples. Show how understanding the stages helps analysts identify suspicious patterns across deposits, transfers, entities, geographies, and asset purchases. Question 3. What is the difference between KYC, CDD, and EDD? KYC is the broader process of knowing who the customer is before and during the relationship. CDD is the standard due diligence, verifying identity, understanding ownership, source of funds, expected activity, and customer purpose. EDD is deeper review for higher risk cases, such as PEPs, complex structures, high-risk jurisdictions, or adverse media. I see them as a risk-based ladder. The higher the risk, the stronger the evidence and monitoring needed. In your answer, define each term clearly and explain how they connect. Mention identity verification, understanding customer purpose, ongoing monitoring, enhanced scrutiny for high-risk customers, and risk-based controls. Question 4. Walk me through how you would investigate a transaction monitoring alert. I start by understanding why the alert triggered, such as velocity, value, structuring, geography, or unusual counterparties. Then I compare the activity against the customer's profile, business model, expected turnover, source of funds, and previous behavior. I review linked accounts, counterparties, adverse media, and any prior escalations. If the activity is reasonably explained, I close with a clear rationale. If gaps or suspicion remain, I escalate with evidence and recommended next steps. Be sure to mention reviewing the alert trigger, customer profile, transaction history, expected activity, counterparties, geography, adverse media, internal notes, conclusion quality, and escalation where suspicion remains unexplained. Question 5. What red flags would make you consider filing a suspicious activity report or suspicious transaction report? I would look for patterns that do not fit the customer's profile. Examples include repeated deposits just below reporting thresholds, rapid in and out transfers, payments to high-risk jurisdictions, unexplained third-party funding, circular transactions, shell company involvement, or activity inconsistent with stated occupation. A single red flag may not be enough, but several weak explanations together can create suspicion. The key is documenting why the behavior lacks legitimate economic or commercial rationale. While answering, focus on behavioral and transactional indicators, not just large amounts. Include structuring, no economic rationale, rapid movement, high-risk jurisdictions, shell entities, inconsistent customer explanations, and adverse media. Question 6. How would you handle a politically exposed person or PEP during due diligence? A PEP is not automatically unacceptable, but but they require enhanced scrutiny because of bribery and corruption risk. I would confirm the individual's role, jurisdiction, family members, close associates, and whether the position is domestic, foreign, or international. I would assess source of wealth, source of funds, adverse media, and expected account activity. For onboarding or continuation, I would ensure senior management approval and ongoing monitoring proportionate to the risk. Make sure to cover why PEPs are higher risk: screening, source of wealth, source of funds, senior approval, ongoing monitoring, family and close associates, and avoiding automatic rejection without assessment. Question 7. What is sanctions screening, and how is it different from AML transaction monitoring? Sanctions screening checks customers, counterparties, payments, and sometimes vessels or goods against restricted party lists and country programs. AML monitoring looks for suspicious behavior, even when no sanctioned party is involved. Sanctions is often more binary. If there is a true match, the firm may need to block, reject, freeze, or report. AML is more judgment-based, requiring context and pattern analysis. Both require strong documentation and timely escalation. In your answer, separate list-based sanctions compliance from behavior-based AML monitoring. Mention names, entities, vessels, countries, fuzzy matching, payment screening, prohibited dealings, and escalation of potential matches. Question 8. How do you distinguish a true sanctions match from a false positive? I compare the alerted party against the sanctioned party using reliable identifiers, not just name similarity. For individuals, I check date of birth, nationality, address, aliases, passport details, and occupation. For entities, I compare registration number, jurisdiction, ownership, directors, and business activity. If the data clearly conflicts, I document a false positive. If key identifiers align or remain ambiguous, I escalate to sanctions compliance rather than making assumptions. Be sure to mention comparing identifiers such as full name, date of birth, address, nationality, aliases, entity registration details, ownership, list source, match strength, and escalation when uncertainty remains. Question 9. What does a risk-based approach mean in financial crime compliance? A risk-based approach means applying stronger controls where financial crime risk is higher. A low-risk salaried customer should not face the same review intensity as a complex offshore corporate with high-risk jurisdiction exposure. I assess risk factors such as customer type, products, geography, delivery channel, ownership, and transaction behavior. The benefit is practical. Resources go to the highest risk areas, while controls remain proportionate, defensible, and aligned with regulatory expectations. While answering, focus on allocating controls according to risk, rather than treating every customer equally. Mention customer type, geography, products, delivery channels, transaction behavior, proportional evidence, and ongoing review. Question 10. A customer receives frequent third-party payments inconsistent with their profile. What would you do? I would first compare the payments with the customer's expected activity. If a student or salaried individual receives frequent unrelated third-party credits, that could indicate money mule activity, fraud proceeds, or unregistered business activity. I would review counterparties, payment references, amounts, timing, withdrawals, and any linked fraud reports. If necessary, I would request an explanation or supporting documents through the appropriate channel. Unexplained activity would be escalated with a clear summary of concern. In your answer, talk about comparing activity with the customer's stated occupation or business, reviewing counterparties, transaction narratives, source of funds, historical behavior, possible mule activity, customer outreach, and escalation. Question 11. What is beneficial ownership, and why is it important in AML? Beneficial ownership identifies the real people who ultimately own or control an entity. Legal ownership can sit with companies, nominees, or trusts, but AML risk sits with the individuals behind them. If we do not understand ownership and control, criminals can hide behind layers of entities. I would verify ownership percentages, control rights, directors, trust parties, and any unusual complexity. Clear beneficial ownership is essential for risk rating, sanctions screening, and detecting concealment. Make sure to define beneficial ownership and explain control versus legal ownership. Include thresholds, complex corporate structures, nominees, trusts, shell companies, source of wealth, and why transparency prevents concealment. Question 12. How would you assess adverse media during a customer review? I would assess adverse media by looking at credibility, relevance, and severity. A recent regulator announcement or court filing carries more weight than an old unverified blog post. I would confirm whether the article relates to the same person or entity, whether it involves financial crime, and whether allegations are supported by multiple reliable sources. Then I would decide whether it changes the risk rating, requires EDD, or should be escalated. Be sure to mention source reliability, relevance, recency, severity, corroboration, connection to the customer, allegations versus convictions, financial crime categories, reputational risk, and documenting a balanced conclusion. Question 13. What information should be included in a high-quality SAR or STR escalation? A strong SAR or STR escalation should let the reviewer understand the suspicion quickly without redoing the whole investigation. I would include customer background, risk rating, account history, key dates, amounts, counterparties, jurisdictions, and the specific red flags. I would explain what checks were performed, what explanations were considered, and why the activity remains suspicious. The writing should be factual, chronological, concise, and evidence-based, avoiding emotional language or unsupported accusations. While answering, focus on clarity, chronology, customer background, suspicious activity details, amounts, dates, counterparties, red flags, investigation steps, why explanations are insufficient, and avoiding unsupported conclusions. Question 14. How do fraud investigations overlap with AML investigations? Fraud and AML often connect because fraud generates proceeds that need to be moved or cashed out. For example, an account receiving scam victim payments and quickly transferring funds onward may be both a fraud concern and a money laundering concern. Fraud teams focus on loss prevention, victim protection, and account security, while AML teams assess suspicious movement of funds. Coordination matters because the same activity may require restrictions, customer contact, and regulatory reporting. In your answer, talk about fraud proceeds entering accounts, mule networks, chargebacks, account takeover, rapid withdrawals, victim reports, AML reporting obligations, and coordination between fraud, compliance, and law enforcement teams. Question 15. Describe a time or approach you would use to manage a large volume of alerts without sacrificing quality. I would manage high alert volume through risk-based prioritization, not by rushing reviews. I would focus first on alerts involving high-risk customers, sanctions exposure, vulnerable victims, fraud indicators, or large unexplained flows. For each case, I would use a consistent checklist but still apply judgment. Clear notes reduce rework and support quality control. If I found repeated false positives, I would flag tuning opportunities while continuing to escalate genuinely suspicious activity. Make sure to cover prioritization, risk-based triage, using typologies and thresholds, clear documentation, quality control, escalation discipline, productivity without box ticking, and knowing when to ask for guidance. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.